Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
And welcome into the program, ladies and gentlemen. This is Navigating Retirement. Charleston, Low Country area savers and investors, your resource for a common sense approach to planning for your financial and retirement future. And along with me as your guide is, of course, the president and founder of the Coastal Financial Planning Group, Rick Durkee. Rick, welcome back in.
Hey, good morning, good day, wherever you are, whatever time it is. This is a podcast, so we're not always at the same time or the same day. You listen to us when you want to, and hey, just look forward to being able to provide information to each one of you that have followed us over the years on the original shows, Retire Right, Money Manners, and now the new podcast series, Navigating Retirement.
Yeah, one of the biggest benefits, I think, of podcasting is the on-demand nature. You get the information when and where and how you want it, which, of course, we are more in on-demand mentality these days. Well, I want my information delivered to me right on my smartphone, right online, at the website, and Rick, the podcast, Navigating Retirement, does that for, again, Charleston area savers and investors who are taking their planning and their financial future seriously. And ladies and gentlemen, if you are encountering us for the first time, I do encourage you to visit that website, cfpgroup.biz. That is the website for the Coastal Financial Planning Group, cfpgroup.biz. Great information, resources, calculators, tools, previous editions of the podcast, videos, linking to a network of different professionals throughout the area. Resources for you can be found cfpgroup.biz. Rick, we have been on a theme here the last few editions of the program on having a defined outcome in our planning. And you wanted to sort of wrap up this conversation in this edition of the podcast and talk about some of the results that you are seeing there at the Coastal Financial Planning Group with your clients who are using this defined outcome method of investing.
Yes, Peter, thanks for the opportunity to talk about that today. We're really pleased with what we've seen in our reviews that we've had with our clients on the year-to-date basis. First of all, most people have that typical reaction, oh, I haven't even opened my statements up, okay? You know, they get the statements in the mail still, they're not getting them online, and they're saying, you know, I kind of want to do the ostrich with my head in the sand and not really pay much attention to these results right now. But then
problem with that, Rick, with the ostrich, your head's in the sand, your backside's still exposed.
That's right. You could get some more of that negative action if you don't do something about it. So, no, Peter, when, you know, we talked over the last two episodes about markets and different types of markets and how things work in those different types of markets. And then I did some reviews this week, and you know, I was pleasantly surprised at some of my people's reactions of, oh no, we hadn't opened up their statements yet. And so I said, well, let's take a look at it. I think this is going to be something you're pleased to look at. And we looked at 2019. Of course, it was a good year for most. And then we looked at the first quarter and we saw the big down in the markets. But on our account statements, we saw negatives under 10%. Now, comparing that to the S&P 500, which we know lost almost 35%.
Yeah, 30 plus.
30 plus in the quickest time period in the stock market's history, in like 20 days. I can understand why people would be afraid to open up their statements. Plus, they probably looked at their 401k statements that weren't managed under the same guidelines. And so defensive management then is not prevalent for their 401k plans, which it should be if they're close to retirement, as a side note. But when we looked at our performance, we're down in that period about, on average, about 7 to 8% in high risk when the market drops over 30, as you just mentioned. And then we look at the year-to-date performance, and we're up in some accounts. we're up in accounts that are actively managed and also taking advantage of the opportunity that's happened after the downturn. So we had defensive measurement for the downside. We had also then upside participation, when things started going back up. So we see positives on the year to date in the 7 to 8% range net of fees. Now, I have to say this as a disclaimer, when we're talking investments, no one's portfolio is going to act exactly the same as what I described. It depends on what risk you have and what type of reward you want to expect.
But in general, some pretty positive results there, and I'm sure you're proud of those results.
Proud of them, and also, I'm got to say this, my clients were extremely happy. Wow, we wish we would have opened up your statements then. We're happy to talk to you, Rick. What else you got? This one client said, I'm getting ready to leave my job, and I have my 401k, and I want to put it into these investments. Is that okay with you? And I said, certainly, if this is the expectation that you want, and we've got some time to let this percolate in this type of a market that we're in right now, so we can get through this and move on.
Well, again, up markets, down markets, falling markets, recovering markets, kind of regular markets moving steadily upwards over a period of time. Those different market conditions, unfortunately, Rick, so unpredictable in what our investment results may be, but it doesn't have to be. There is a way to have defined outcome investing results within a certain range that you determined and that you are comfortable with. And if you'd like to find out about how to have some predictability for a defined outcome in your investment results or in the income that you can produce for yourself in retirement, pick up the phone, give Rick Durkee, give the Coastal Financial Planning Group a call, 800-491-6220. That's 800-491-6220. Visit the website, cfpgroup.biz. That's cfpgroup.biz. Rick, I know that a lot of your clients may have already even been implementing some of these strategies without even really realizing what it was with the defined outcome investing objectives that we have been talking about over the last several weeks, but I'm sure that they've appreciated the results.
They sure have, Peter, because when we're looking at these types of markets, we look at the normal markets, the market correction time periods, and then the market recovery periods. We certainly, as an investor, wish that we could perform or outperform our benchmarks in all three of those markets. But as I mentioned before, that's very difficult to do. And really, if someone touts that they do outperform in all three of those type of markets, we should basically run away because it's not the norm.
At least not with the same approach with every dollar. If we have earmarked and segmented off pieces of the portfolio for the different purposes to behave best in those different various market conditions, Rick, that is possible, but we've got to realize that those other dollars are maybe perhaps not going to perform the best during that same circumstance.
Yeah, and that client that I just talked about that we did the review for, they were a younger couple. So we were able to say we have a bucket now earmarked for 10 to 15 years from now before we'll use it for retirement. So we were able to take those retirement assets and put them at more risk. So, Peter, the point is that you should definitely earmark money and how it's invested based on what your intentions are for how you plan to use it and when you plan to use it. But virtually no money manager can beat the market in all three of those market types that I just mentioned. The best money managers in the world can outperform typically in two of those three markets. And even then, research shows that, this is only true for a minority of investment managers. Now, when I say the term investment manager, we got to think about what that means. An investment manager in my world is an institutional manager that manages multi-million-dollar accounts or billion-dollar accounts. And they have been tasked with several institutional clients to manage that money. And at the Coastal Financial Planning Group, we use their same investment philosophies for our retail clients. So we're getting that institutional best of class management for our clients on a retail level. And one of our managers typically is going to be for accounts like this group of people that I said are not in retirement red zone yet. They are not in that 5 years prior or that 5 years after they retire. They've got a longer time horizon, maybe 10 to 15 years. So we're going to let that money roll at higher risk. This particular money manager, the account is called Alpha DNA, and it's only available through the retail platform that we represent at the Coastal Financial Planning Group. But typically it's only made available to institutional managers. And structured notes that I mentioned before were only available to institutional clients. They are available for these type of markets and are available to be able to predict better what your upside and downside potential is, or that defined outcome that you mentioned earlier. But in Alpha DNA's case, this particular client that I had a longer time horizon, so they did lose some money in the first quarter here, but they've rebounded and they're up 7-8% net of fees. And I compare that to the S&P 500, which is still negative year to date. You know, you say, wow, they didn't take the downside, and they certainly got a nice upside here year to date. So they're going to stay ahead of the game.
Again, that is from having that defined outcome approach, purpose alignment within the portfolio. You've got a defined purpose that you want to achieve and accomplish. You align the dollars and the investments with that purpose, and a time horizon or a timeline optimized portfolio approach. And those two things can help to define that outcome, and specific vehicles that are available to Rick Durkee and his team there at the Coastal Financial Planning Group can even further help to define your outcome. If you'd like to have more of a predictable outcome with your investments, with your dollars, pick up the phone, give them a call, 800-491-6220, 800-491-6220. You can read all the information, all the various disclaimers. You can dig into the details. Rick Durkee can go over those with you. You can find out more by calling 800-491-6220 or visiting online, cfpgroup.biz. Rick, we always appreciate your time and bringing this information to the savers and investors across Charleston and the Lowcountry.
Thank you, Peter, and thank you to our listeners here across the globe now as we're worldwide in the podcast. And hey, a 15-minute quick consult, no worries, no hassles, no obligation. Call us today, 800-491-6220.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.